Good morning. The People's Bank of China is their central bank, like the Federal Reserve in the U.S. And the PBOC is using the Shanghai Gold Exchange and vaults in Hong Kong and in friendly countries to store their own gold reserves. Now they're expanding, and they want to be the custodian of gold reserves held by other countries. That would strengthen China and the other BRICS countries and their new financial system, which is outside the U.S. dollar, and the SWIFT banks in Europe. This is also very bullish for gold and will push prices much higher over time. Here's why. The People's Bank of China is not asking other governments to move gold from vaults in Europe or the US and haul them over here, though they probably wouldn't say no. But instead the gold will be from new purchases. So consider any country that runs trade surpluses in dollars or euro. Those funds could be swept from banks in the US or in Europe, custodied in Hong Kong or here in mainland China, and then used to buy gold. It so happens that China is also the world's largest gold miner, with over 30 tons of new gold supply coming out of the ground every month. So this is a triple whammy for the US dollar and a bonanza for China and the gold bulls, because foreign central banks and sovereign funds are shifting their foreign currency reserves out of our banking systems and into theirs, and then trade those dollars and euro for gold. And the source of most of that gold is coming from Chinese gold mines. That's why that line there in bold at the bottom of the page here on Bloomberg is the most important sentence in their entire report. Gold prices are on a tear, up 40% for the year, which isn't even over yet. It's already the biggest move since the high inflation days of the late 1970s. Under that surface and noise, though, is that China's central bank's moves with their Shanghai Gold Exchange and the system of vaults they've set up across the world are rerouting the world's gold markets and financial systems. The offshore vault push is moving the center of gravity in gold. The new system is a time zone tilt, a geographical tilt, and a power tilt. It allows for 24/7 price discovery and trading, and gives countries a place to store their gold outside of Western regulators and politicians. Any BRICS country, any energy producer, and we should also say that any country that does business with BRICS countries, will find all this very appealing. And it's too late for the West to do anything about it. The sanctions on Russia in 2022 put all these efforts on hyperdrive for countries to get their reserves out of Western systems. Add to that Chinese supply chain dominance in mines across the world for almost all the raw materials, and it's now we see their strategy behind everything. She makes a strong argument, and if so, we should expect this chart to look a lot different over time. This analysis is a long read and repeats itself in places, but we'll share some of it on screen and link to it. The Shanghai Gold Exchange was set up in 2002 and is now the world's largest exchange of physical. In 2023, they processed 75% of the total gold volume